Hello, my name is Ronald Mason. I'm the House Charlotte Program Manager. Today we'll be going over our Homeownership 101 sessions that Housing and Neighborhood Services offer. So we hopefully that you're able to take this information and help you with your home buying needs. So let's get started. So basically, after our presentation and our session today, we hope you're able to answer this question for yourself. Is homeownership right for you as an individual? For some people, it may be where they want to take care of a property, or they want to be able to have generational wealth down the line. Some people may not want the responsibility, like cutting the grass. So hopefully after today, this is going to be something you can answer for yourself. Also, too, real quickly, we'll be going over some of the lending processes that you may face as you're buying a mortgage. And that's exactly what you'll be doing, is buying a mortgage. And then we're going to talk about some resources. So help is here. We're going to talk about available programs and products that the City of Charlotte offers, as well as the state's program, North Carolina Housing Finance Agency. And then our next steps, we'll go over some resources that may be helpful to you as you're going through your home buying process. We work with two housing counseling agencies, one called Dream Key Partners, and the other is called Community Link, that may assist you on your day-to-day, or basically go over everything with you in regards to your budget, your credit report, and help you get started. All right. So there's a real quick quiz that you can answer for yourself. Is homeownership right for everyone? It may or may not be. Here's some real quick pros in regards to owning a home. Real estate is usually a good investment. Normally it is, as you can tell with the market that we're in currently right now. If you bought your home about maybe 5 or 10 years ago, you'll probably see quite a bit of appreciation on your home. Normally properties or values go up normally. There's tax benefits that come with owning a property or owning your own home. Your mortgage rates and tax is a tax deductible. So when you go file for your taxes each year, you can claim the interest that you paid on your mortgage. Normally it's a stable housing cost. So it depends on the loan product that you receive or you decide to buy as a mortgage. You have a 30-year fix, you have a 15-year fix, or you have a 5-year or 10-year fix, and pretty much the principal and interest on that mortgage is going to be fixed, so it doesn't adjust. And this is your house, purple wall, go for it, you can do what you want, this is your property. So those are the advantages of owning a home. So here are some of the cons in regards to that come with owning a home. Decreased mobility. This is your responsibility. Can't pick up and leave your property behind and leave it up to other people to take care of it. So this is your responsibility, so it's hard for you to just leave it behind. Cost of ownership. There's real estate taxes. There's maintenance. You have a leak coming from your roof. It's your responsibility to fix that leak. There's HOA fees if you live in an HOA community. One tip that we like to give our potential home buyers: if you can ask your real estate agent or even ask the community if you can receive a copy of what their rules and regulations are, just to make sure you're comfortable with it. You hate to move into a HOA community and not like the rules that come with it. There's transaction costs, all kinds of costs when you're buying a mortgage and you're closing on your home. There's attorney fees, there's loan officer fees, there's loan processing fees, there's title insurance fees. There's all kinds of transactional costs that you're responsible for paying. Real estate is usually a good investment. Normally it is, but there may be times where the market is coming down, or there may be a situation that may have to be a dire emergency for your family or yourself, where you may have to leave and maybe sell quickly and not get as much of the appraised value that you are owed. So it depends. But I would say if any type of investment that you want to make, real estate is one of the best. It always appreciates at one point in time. So real quickly, let's go over some other advantages and disadvantages between home ownership and renting. So the advantages of homeownership, this is privacy. This is your own home, okay? Usually it's a good investment. That is correct. Normally this is a great investment to make. More stable housing costs, right? You're more stable in regards to it. So you have a 30-year fix. For 30 years, that interest and principal is going to stay the same. So the disadvantages of homeownership: long-term commitment, maintenance, and repair costs. You're responsible for making all the repairs that come with owning your home. Loss of flexibility. All right. So look at the advantages of renting: lower overall housing costs. All right. So when you move into your home, when you move into your renting space, normally you know up front what your rent is each month. Short-term commitment. You may be renting for a year or so it's not going to be as long as having a mortgage where it's fixed for 30 years. No maintenance or repair costs. The property owner is responsible for that, not you. But by renting, you can't claim your taxes. You can't claim your rent that you're paying each month on your taxes. So there's no tax incentives. Changing housing costs. Your landlord can increase your rent each year or each month if they choose to. And you do not get any equity by renting someone else's home. So those are real quick examples and of advantages and disadvantages between homeownership and renting. So here's a real quick quiz. Every mortgage loan is basically the same, true and false. That would be false. So when you're going and you're shopping around for a mortgage, we would like you to look at it as if you were buying a used car. Buying a mortgage is less than likely opening a checking account, but it's more likely buying a used car. It can be complicated. So when you go on a used car lot, right, the salesman is showing you all types of cars and the mileages and all the benefits of owning this car. Same with a mortgage. You want to sit down with a loan officer and check and see what mortgage product is good for you and your family at that time. What's going to fit your needs? What's going to fit your budget? So that's why we make that analogy. It's more like buying a used car than open up a checking account. All right. So here's some other things that come with mortgage buying. Credit score. Your credit score is a number that indicates the lenders your credit risk. The better your credit score, the better interest rate you get. The lower your credit score, the worse the interest rate that you may get. The higher interest rate you may get. Okay? There are three main credit bureaus that mortgage companies pull your credit from. One is Equifax, the other Experian, and the other is TransUnion. All right, so each of these bureaus collect data reported to them about your credit and repayment history to formulate your scores. There are multiple scores. Ask your bank which one they use. Normally, a lot of times they'll pull all three and take the median number of all three. So what I'm saying is, let's say your Equifax, you have a 750, Experian, you have a 720, and the TransUnion, you have a 710 credit score. What they'll use is that Experian 720 to qualify you. So this is kind of like an example of how your credit score is made up. So 35% is your payment history. 30% is the amounts that is owed. All right, 15% of that is the credit length. The longer you have credit can help you. There's 10%, that's the types of credit, well as revolving loans, credit cards, or auto loans, or student loans. And then the new credit, 10% of that. So that's what makes up your credit score. It's kind of like a quick example of different types of credit scores and what can qualify you, what may not qualify you. So as you can see, 300 to 579 is considered very poor. I believe the lowest a lot of banks will qualify a potential applicant on is 580. So anything below that, you may not be qualified. 580 to 669 is considered fair, but you can get approved for a mortgage, but your interest rate may not be the greatest compared to a a 670 to a 739. They most likely may get a lower a lower interest rate than you may have. 740 to 799, very good. That will be great in regards to have a lower interest rate. And then you have exceptional, is considered 800 to 850. Okay. So here's some lending process terminology that you'll come across. There's principal, interest, taxes, and insurance. That makes up your entire monthly mortgage payment. Okay. That's the loan principal with the interest and the real estate taxes and the insurance. All right, mortgage companies ask that your taxes and insurance is rolled into that payment, just to make sure that they're paid. You also have front-end ratios, which is the mortgage cost as a percentage of the total income. So what that means is your potential mortgage payment up against your monthly income that you bring in. All right. And your back-end ratios is all of your debt as a percentage of the total income. So that's all of the credit card payments and the potential mortgage payment against your total monthly income. So those are two different ratios that are very important that you may know and talk to your lender about, because a lot of lenders have specific guidelines of how much on the front end and back end ratio that you can have. There's the loan to value, which is a ratio used to express the amount of a loan compared to the value of the underlying asset. Expressed as a ratio, example, 70% loan to value. So that's the loan amount that you're receiving compared to the actual value of the property that you're purchasing. You may see sometimes where there's a 100% loan to value. That means that they will pay you or give you a mortgage up to 100% of the value of the home. If you have 97%, that's the max of they'll lend you compared to the value of the loan. So there's still a 3% that you have to come up with. And real quickly, here's some two different types of loan products that may be beneficial to you, or this is where we're going into the used car analogy, where you want to make comparisons of what fits your family needs and what fits your needs. So real quickly, let's look at an FHA loan, right? There's no maximum income. The minimum score is 580, but look, your front end ratio is 31%. Your back end ratio has to be 43% or lower. And the rate right now on an FHA loan is 6.125%. Now let's compare it to a product that North Carolina Housing Finance Agency offers, which is called the North Carolina Home Advantage loan. Now look, there is a maximum income in regards to this loan product. Yes. So the maximum income for this loan product right now is a household cannot make more than $126,000 a year gross annually to qualify for this loan product. Your credit score has to be a little higher than the FHA, which is 640. You can see the benefit on this loan product. There's no front end ratio, but there is a back end ratio of 43% similar to FHA. But let's look at the interest rate. And the interest rate on this loan is 6.125, which is lower than an FHA loan of 6.25. So, hey, this is what we're talking about. Shop around, look at different loan products. What may help you, what may not help you. So this is just two quick comparisons of what that may look like for you. So let's look at how the lenders make their money. All right. Interest rate spread. Lenders make money off of the interest rate that they give you. So the higher the interest rate, the more money they can make. So the interest rate is determined by your risk. So you have a good credit score, the lower the interest rate. If your credit score is not so good, you're going to have a higher interest rate. There are points. There are points that's charged to you. Sometimes points can be 1% or 0.5%. Talk to your lender and ask them what those point percentages are. That's how loan officers are paid. That's how their commissions are paid. So you may have someone who is charging you 3% at 3 points. That's 3% of the loan. That's going to be a cost to you. There's fees like we talked about before. There's loan officer fees, like commissions that you pay. There's real estate agent commissions that you pay. There's loan our processor commissions that you pay. So there's all kinds of fees. So go through and when you're talking to your lender, ask them about what those fees are and make sure you're comfortable with that. All right, so that's how lenders make their money. So let's look at a couple of scenarios that you may see yourself in, or in regards to qualifying. All right, so here's one example. Look at Sarah. Sarah goes for a loan. Sarah has $5,000 in savings, which is great. Sarah has a great score, not too bad. It's 690. She can definitely get qualified for something, get a decent interest rate. But Sarah has a car payment of $200. She earns $22 an hour and occasionally earns overtime. So with her overtime and her gross annual income that she receives, she gets about $52,360 a year, which is great. But Sarah only wants to rely on her regular hours, which is the $45,760 that she makes annually. So she's willing to spend about $1,300 on her mortgage, but she has a car payment of $200. The bank will allow up to $1,144 in a mortgage payment. She has great credit, but she qualifies for several assistance programs like the House Charlotte program. So basically what she makes, she can purchase up to $210,000 in regards to buying a home, which isn't bad for Sarah. Here's another example. Let's look at Mark. Mark earns a salary of $60,000 a year. He has a partner that earns $45,000 a year. So it's combined, they're about $105,000 together. Mark's credit score is not as great as Sarah's, but he does have a decent score at 670. Mark can afford and is willing to spend up to $2,000 on his mortgage. And he has a minimum credit payment of $100 and a $400 a month student loans. So those are all factors that Mark has to consider when it comes to obtaining and buying a mortgage. Okay, credit score can earn him an interest rate of 6%, but the bank says he can afford $2,125 a month. So they're saying is that based off of his credit score and the money that he brings in, yeah, they say he can buy up to that much or afford that monthly mortgage payment. But monthly debt does not affect the ability to borrow. So Mark can afford a house up to $297,000 and a home purchase at $2,000 a month. A score of 750 would save him about $125 a month. But see, that's where the credit score has a factor. So if he had a higher credit score, he could have saved a lot more money. But he still has a great opportunity. So let's recap what we just went over. And these are questions for yourself. Home ownership may or may not be an option for you. Home ownership may or may not be a good option for you. Mortgages is like a used car. You need to shop around. Mortgages are like a used car with different vehicles work for different people. And please get help with a trusted third-party advisor. So what we mean by that is housing counseling agencies. We work with two, and I will be explaining more in details at the end of the presentation, the importance of it. And like we said before, it's more like buying a used car. Please shop around and see what loan product works for you. There's all kinds of mortgage products out there. There's a 30-year fixed loan. There's a 15-year fixed loan. There's a 5/1 ARM where it's fixed for 5 years, then it's adjusted. So it's based on what is going to be benefit you at that time to help you get your foot in the door. All right. So let's talk about the programs and products and resources that are out there for you in regards to your home buying needs. The City of Charlotte has the House Charlotte Down Payment Assistance Program. North Carolina Housing Finance Agency has the Community Partners Loan Pool. And one of the examples I just showed you earlier, they also have the Home Advantage Mortgage product. There's classes and counseling sessions that you can get on your own outside of our presentation today with housing counseling agencies, and like I'll talk to you at the very end of the 2 that we partner with. Please, there are resources out there. You may want to take the time. If you can, you can reach out to myself or our partners at Dream Key Partners for any type of resources, or even do some Google searches. But there's all kinds of advantages that people may take advantage of, or resources that are out there, but you have to do some research. So let's talk about the House Charlotte Down Payment Assistance Program. The House Charlotte program provides up to $10,000 to $30,000 in down payment assistance. That's up to. These loans can be used for down payment, points and interest rate buy downs, or closing costs. So what that means is that if you qualify the House Charlotte down payment assistance, you can use our money to do these 3 things. You can buy an interest rate down. So let's say if you have a 6% and they're saying for like $2,000 or $3,000, you can buy it down to 5.25%. So you can use our money to do that. So that'll make your cost more affordable for you with our down payment assistance program. All right, let's go over how the loan works. All right, the House Charlotte loan is a 15 to 30 year deferred forgivable loan with a 0% interest rate. So what does that mean? There's no monthly payments that you need to make into the city of Charlotte for the House Charlotte Down Payment Assistance Program. Okay, now the 15 and 30 year, depending on the loan product that you receive, will determine how long the forgivable loan will be. All right. Now, if any of these happen, you have to pay the city back. So the loan must be paid back if any of the following occurs: death of the borrower, God forbid, default with the first mortgage, change in occupancy status. That means if this is not your primary residence anymore, refinance for a cash out, or sale of the home. So whenever any of these things happen, you have to pay back what's owed to the city. So what that means is that if we gave you a $10,000 down payment assistance loan, you have to pay back the $10,000 prior to the 15th year. After year 15, year 16, the loan is totally forgiven. All right, so if you receive up to $30,000 with a 30-year loan, what that means is during that 30-year period, if you decide to sell or refinance or anything happens and change the occupancy or it happens to be death to the borrower, you owe back the $30,000, but without any interest. So it's a great opportunity to get your foot in the door. Okay, so this is how it works. The House Charlotte program is based on total household gross income and family size. All right. The maximum area median income that we'll go up to in regards to our loans is 110%. We do not exceed 110%. Okay. All parties that will be involved in regards to owning the home or that will be on the mortgage, so that's a spouse or a partner or any type of grown kids that are going to be on the home mortgage, all parties on the loan must attend a minimum 8 hours of home buying education and counseling with a HUD-approved housing counseling agency. So you can use any HUD-approved housing counseling agency as long as you do the 8 hours of the home buyer education. All right. So like I said before, you can receive up to $30,000 for families and city employees with an income at or below 80% of the area median income. So the area median income chart is available on our website. And at the end, I'll give you our website. So you can kind of look at that and see, based off your household size, where you fit. Up to $10,000 for families with an income above 80% AMI and up to 110% AMI. All right. In order to use the House Charlotte program, there are property eligibility. So if you're buying a single family or a townhome or a condo, the maximum sales price that you can buy and use the House Charlotte program is $315,000 on new construction properties. For existing properties, the maximum sales price is $300,000. and you have to buy within the city limits of Charlotte. All right, so we talked about the city's down payment assistance program. Now let's look at the state's program. The North Carolina Housing Finance Agency offers a community partners loan pool, which is a down payment assistance program. Similar to House Charlotte, it offers a zero interest deferred second loan up to 20% of the purchase price. So what that means is it could be 20% of the purchase price that could be used as down payment. Depending on the first mortgage loan type, the maximum loan amount is $50,000. $50,000 deferred for the life of the loan. So deferred means if your loan product on the first mortgage is 30 years, this product is going to be deferred for the life of the loan, meaning 30 years. They also have up to 20% of the purchase price when combined with a North Carolina Home Advantage loan, which is another North Carolina Housing Finance Agency product. There is income limits with these. The maximum income limits is similar to House Charlotte. On this loan and down payment assistance is up to 80% or below AMI. All right, so here's a quick question. If you're buying within the city limits of Charlotte, can you use both House Charlotte and the North Carolina Housing Finance Agency Community Partners Loan Pool? So the answer to that question is yes. So look at it. If you're qualified for House Charlotte and you're under 80% AMI, you can use the House Charlotte $30,000 with the Community Partners Loan Pool $50,000. So that's a total of $80,000 in down payment that you can use. So it's a great way to use to bring down the purchase price as well as buy down the interest rate. So that's why we wanted to show everyone these resources that are out there that the city as well as the state that offers, because it could be beneficial to you and your family. All right. So like I showed you before, North Carolina Housing Finance Agency offers a Home Advantage mortgage. The Home Advantage mortgage provides eligible home buyers with competitive interest rates and down payment assistance up to 5% of the loan amount. For first-time home buyers and military veterans with lower incomes may be eligible for the first Home Advantage down payment, which is $8,000 in down payment help. Up to 100% of financing on FHA, USDA, and VA loans, and 3% down payment assistance on conventional 97% loan-to-value loans. So with the FHA Home Advantage mortgage, this is the one where I stated that the maximum annual income for your household size has to be 126,000 of combined household income. You can qualify for this loan product. It's a great opportunity. You can get $8,000 with this as well. All right. So let's look at some next steps. We've been talking and advocating throughout this presentation about the opportunity and the resources that are available to you. The city partners with 2 housing counseling agencies. One is called Dream Key Partners, and the other is called Community Link. This is a great opportunity if you've never been through the home buying process, or you have questions, or you're not sure, or you may need help with paying off some credit, or you may need help with your budget. These are where the housing counselors come into play. Okay. I've been in the mortgage business for 20 years. When I first purchased my home, I took an FHA loan. I received the FHA mortgage. That was what I felt at that time was going to benefit my family. But I had to go through a housing counseling. And even being in the mortgage industry, I was able to learn something. So if you need help with finding a lender, or if you need help with a realtor, they will help you get mortgage ready. So here are 2 of the partners that we work with. Here's the Dream Key Partners website, which is dreamkeypartners.org. Their main line number is 704-342-0933. Community Link, their website is communitylink.nc.org. Their main line number is 704-933-7405. Talk with a housing counselor, review your credit report, and start talking with lenders. So we come to the end of the presentation. Like I said before, this is just a real quick summary of what you may face when you're going through your home buying process. This is my information. I'm Ronald Mason, the House Charlotte Program Manager. You can email me at ronald.mason@charlottenc.gov, or you can call me at 704-336-2754. I'll do my best to answer all calls and emails right away, but if you have any additional questions, feel free to reach me and I'll definitely get back to you. And if I can't answer those questions, I'll send you to the people that can. So I hope you were able to learn or get some insight from this presentation with your home buying process and needs. Best of luck to everyone. Do not get discouraged. If right now isn't the opportunity for you, there will always be an opportunity when it comes to buying real estate. Take care and have a great day.